Fomc, ladies and gentlemen, welcome to tonight's live. It's one of the biggest lives that we do on this channel. So get yourselves ready. If you've got your coffee, you've got your popcorn, probably going to have a laugh and a joke in this live stream. It all depends on the reporters that are asking Jerome the question. But more importantly, the big question is anyone going to ask him what he thinks on the comments made by Donald Trump earlier on, calling him stupid? You can't call the boy stupid. This is Powell we're talking about. Takes no prisoners, especially when it comes to discussing whatever the president has got to say. But Trump will throw comments like that left, right, and center. Now, could you imagine we actually get a rate cut in today's readings? Do you understand what chaos that will bring? But the odds, the odds of that happening are minimal. Something drastic would have to happen. But data's not backing it up. Tariffs, war, oil prices. Even though wage growth has gone up, it's still not enough for the Federal Reserve. So this is what we're going to do tonight. The way this live's going to work, it's going to go in a couple of parts. Firstly, we're just going to break down assets across the board. We're going to dive into a couple of comments that are made here and there. We're going to work out what's going on with this war, because apparently we're going to witness something unbelievable later on tonight. Now, news articles, medias, and what have you, they're going to say things to scaremonger people. But ultimately, we just need to focus on what's going on with price right now. And that will be a true representation of investors' belief in value. Okay? Now, as we head into the FOMC projections, the statement, and of course, the Fed fund rates, that's going to be done in 30 minutes time. After that, we're then going to be diving into a few altcoins. If you guys got anything you want me to talk about, I will dive into that. We're going to dive into a couple of other things regarding Bitcoin. But more importantly, once we get through all of that, we'll then go into the FOMC press conference. Now, the press conference is really where the meat and bones is for the marketplace. The statement itself is just going to reveal whatever it is that federal board members are thinking about the current story. But what we've got to be focused on is how the Federal Reserve is going to factor in the tariffs, because they're saying that the tariffs right now have been built into, or the impact of, have been built into where the Fed expects the interest rates. We're looking for 2 rate cuts. Word on the street is that we're only going to get 1, and it's all down to 1 vote. That was the difference between that. So with that being said, let's get with the program. Let's break it down, because we've got a little bit of flavor coming from Bitcoin and from NASDAQ right now. And he said it again. Trump may or may not strike Iran. What is he doing? All right, so let's get with the program, ladies and gentlemen. If you are new to the channel, welcome. My name is Tino. You're tuning into Traders Reality. Let's have a conversation, ladies and gentlemen. Let's break it all down. So here we go. Bitcoin price action right now. It's 103,747. Just zooming out on the higher time frames just to put it into perspective for everyone. We go over and we can see Bitcoin is actually trying to break through this 50 EMA. It's made a nice little stop run earlier on to only bring it back. And if it is coming down, guys, then the idea is that there is a possibility that the narrative is changing and investors are like, okay, it's starting to get really, really bad. Quickly going over into the bonds market. The bonds right now are actually trading positive. Now, what you really want to witness is you want to see the bonds market trading positive and, of course, the stock market trading positive. But NASDAQ right now is starting to make a little bit of a move to the downside. Of course, it's lost the high from this morning. And we just go over to XO charts for a split second. And you can see, right, we've got some movement right now. And it hasn't made effectively a low, but the price action right now is going into the initial balance, but it's also looking like it's going to attack the daily open right there and the daily low. I mean, if NASDAQ does lose the daily open by principle of this, then we're going to have ourselves a bit of an interesting ride today, ladies and gentlemen. Okay, now, quickly putting it into perspective. So here we go. We're going to get federal funds rate, FOMC projections, and the FOMC statement. This is all coming out simultaneously. So we're going to be keeping an eye on what the Fed is actually saying regarding this. Then, of course, 7:30, we'll get in, 30 minutes after, we'll be getting into the press conference itself. Now, let me just explain something to you all. If you remember not so long ago, Donald Trump had made a comment but then was refuted back. I think it was in regards to Trump media talking about them trying to raise $2.5 billion for a bill to effectively buy Bitcoin. He refuted that and said, no, that's not the case. We did not say that. Well, Trump media had said that that's not what we're doing right now. So the Financial Times, stupid journalists, well, they only went and returned the favor. I mean, that's not really great when you're making headlines of a very reputable news anchor and you're the top saying Donald calls for a huge rate cut as he calls Fed's Powell stupid. What he said is okay. He's calling Powell stupid. But the fact that they've put that there is really a little stab at Donald Trump and Trump media for effectively saying what he said before about them being stupid journalists. Now, going into it all, guys, Trump is desperate for the rates to be cut. And let me explain to you why. It's in front of you. Look left. 4.5%, right? 4.25 for the pound. So dollars at the top. 3.85 for the Aussie, 3.25 for the New Zealand, CAD 2.75, Euro 2.15, and the yen coming in less than 0.5%. Why is this important? I'll tell you why it's very important. Because it's the cost of business. That's how much you're going to be charged when you borrow money. Now go over to the dollar dominance right now to put it into perspective. How much value is your dollar? Well, it's not. There is no value in your dollar right now. Go into a 4-hour time frame, you can see dollar has been doing very well to hold out at these lows. It has formed a nice little structure down here. We do have some depreciating zones right here at 96 and 94, which I do expect the dollar to go to, okay? But quite frankly, I see you guys liking the stream. Come on, man, 900 likes. Can we get 1,100 likes? Can we get 1,000 likes? Something like that would be nice. But the dollar dominance is very important for you to understand because right now you're not getting any purchasing power, which is why you're witnessing the euro still trading to significant highs. This was the yearly highs and they've taken that. Now they're pulling back ever so slightly. But in tonight's FOMC, they will be moving. Euro will be moving. The yen will be moving. And already they are trading positive, guys. So that is a good thing for anyone that is involved in yen and euro. But also what's going on with this story regarding Iran and safe haven investors, gold is not moving. Now, why is it important for gold to represent the term of the interest rates? What do I mean by that? Quite frankly, when interest rates get cut, gold goes up. Got an inverse relationship, okay? Because you're not going to be getting any yield on the dollar. You're losing yield when the rates are being cut. So investors go to gold. Gold hasn't moved. No movement, even with this war, which tells you they're waiting for the rate path. When gold moves, whatever direction it moves, it will be a representation of investors' view on the interest rates. So if Powell turns around and says, no rate cuts this year, gold will slump. Because investors are like, okay, then we're going to stay at high rates for longer. Happy days. We'll stay where we are. Okay? But if they do say we're going to get rate cuts, and it's in line with the expectation of investors when it comes to their bets, then of course the idea is that we're going to see gold's price make a move to the upside. Okay? So those of you gold traders, keep an eye out on gold in a few moments, because when the Fed comes out with its policy statement and what have you, then that is going to be another trigger for the market to move. Something that I am paying attention to, guys, is, of course, the volatility index. It is starting to come down, but it's instantly come back up again. This is inconsistency. This is complacency. This is investors don't know what to do. They really don't know what to do with and what to expect from the Federal Reserve. Okay? So when you pay attention to this, when this shoots up, that's when you start looking for opportunities to buy, when it shoots up. But when I say shoot up, it needs to be going to around 30. Okay? Now, something's come out with cryptocurrency for all the Bitcoin maxes and all that stuff. Okay? The article goes on to talk about what's going on and the impact of the FOMC. Check this out. It says here that crypto market cap outpaces transaction volume. All right? And effectively, it says the NVT ratio is a metric to assess whether Bitcoin is overvalued or undervalued. Going into the article, it says here that additionally, a value above 2.2 suggests that the market cap is outpacing transaction volume. In short term, this move signals a price reversal, which has often preceded corrections in crypto prices in the past. So that could also imply, as it says, fewer transactions relative to the market value may indicate reduced utility or Bitcoin adoption as a medium of exchange. Now, go back into Bitcoin price section. We've made a high. We've made another all-time high. And now we're stuck in this consolidation zone. Going over into the order flow. What is going on over there? Zoom out. Where's the money? Where is the money? The money right now, ladies and gentlemen, is down here. It's below. And this has been developing over the course of the week. There's not been that much interest. These people up here want to sell. And they want to sell because they want to get out as soon as they can. But Bitcoin seems to be coming down. Now, for all the guys who want to understand where Bitcoin's price is relative to orders, this is where the commitment is. We go down and we look at the orders on bid side. So that means the orders in green is where people want to buy, right? That means price has got to come down for those orders to be taken. 4 million at 103,341. We go further down, 103,300. Another 4.8 million at 103,200. Another 4.64 million at 103,150. Going even further into it, the high so far is 5 million, okay? 5.34. After that, I'm not seeing anything. 5 million again at, 102. Go even further. Now we're getting closer to lower prices. You got 6 million at 102,500. So the problem that I've got, ladies and gentlemen, is people aren't bidding yet. And if people are not bidding, that implies that they're waiting for it to be cheaper. So the logic would then suggest that maybe Bitcoin could be getting primed to come down. How many of you are on the idea that Bitcoin is actually going to come down tonight? How many of you are on the idea that it's going to come down? Comments, where are you? How many of you are new? Like the stream and let me know. Comment. Slumpville. I know what to do. Even if this goes up, it will go down. The war is not finished with Iran, but is inevitable for many to fall. Well, look, this is what's going on with regards to the war. See this. Spectator Index comes out with it. Iranian state media claims there will be a surprise tonight that the world will remember for centuries. What are you going to do? It's a lot of back and forth. You know, it's probing Trump. It's trying to provoke Trump. Okay. Now, going into it, the BRICS news thing here. You've got Justin, Senator Bernie Sanders slams Israeli PM. Okay, fine. We're not interested in that. And now you've got Iranian missile en route to Israel. So it's all happening. Look at it. You know, now whether this is true or not, when you see these videos, I mean, you've got here, Iran says Lebanon, Hezbollah will take action if the US enters the war. We've already got control of the skies. Technically, US is in that war. Okay. And now Iran launches a new wave of ballistic missiles towards Israel. So look, this is where it gets interesting. Venezuelan president, he calls on China, Russia, Turkey, and all Islamic nations to support Iran. That's World War III. But who's going to go against the United States? If the United States always intervenes with wars, is anyone ever starting one with the United States? I mean, in this day and age, let's be honest. You're calling China, Russia, and Turkey? Russia, Putin's trying to be a mediator with Iran. And he's all right with Trump. And when Trump's not putting out any sanctions, to say the least. But, I mean, look at this. Iran is experiencing a widespread internet blackout with only 3% of the country remaining connected. That is sad. How are loved ones going to be communicating with each other in all that madness? It's horrible. Here we go. There it is. Look, Russia issues warning to the United States against joining Israel's war with Iran. Donald Trump is not giving out any intelligence about this. And he's just been saying over here that there's nothing here. Trump says he may or may not strike. It's just absolutely dog, if I'm honest with you all, ladies and gentlemen. World War III, who would be our Oppenheimer? Oh, wow. The destroyer of worlds. This is true. This is very, very true. I think it will go up. We've got a lot of people are saying down. A lot of you are saying down. Let's just quickly go back into the NASDAQ. Let's have a look at what the stock market is saying. I mean, look at that. That is so marginal. Bloody hell. So marginal, NASDAQ. Horrible. This is why you do not trade days like this. I mean, you can trade days like this, but it's all about what you decide to exploit. I mean, if you're a smaller time frame trader, then you can see V-shaped reversals right here. All right. So there's that logic right there, ladies and gentlemen. But when the FOMC comes out, that's when things are going to get very interesting. Very, very interesting, in my opinion. Now, if you remember this chart, I'm just going to dive into this. A lot of people are calling for a market crash, stock market crash, right? I don't think we're going to get it just yet because we haven't hit an extreme on this smart money, dumb money chart. Let me refresh it to see what the next reading is. 42. Yeah, it's not there yet. When smart money is at 0.42, it's just, it's not there. I need it to be about 0.38 for it to be okay. Maybe we're going into a reversal and the market is going to crash, because when the blue line goes down, it effectively implies that smart money is finished selling. So that means that we could get another all-time high with everything across the board, and then the market drops. But man, all-time high with all of this happening, it would then prove to you that war is profitable. That's the worst thing about it, you know? Tino, UK is going to... No, whatever. Tino, what about banks gains graphic? Didn't check that for a long time. Oh, the unrealized bank losses. Yeah, well, doesn't matter. It's all going to be relative to the actual interest rates, because then that's really going to hurt them if the interest rates stay higher for longer. Okay. Anything else? Tino's good. No, I'm not going to read that. Dump it to 10K. I'm tired. Never mind. Well, whilst you're all at it, how many of you are new to tonight's live stream? How many of you are new? We've got some movement. We've got some movement. What time are we on? 10-2, ladies and gentlemen. The news will be out very, very shortly. Very shortly, we're going to be having the FOMC statement, funds, and the projection statement. Okay, so that's going to be very interesting for us. So if I can find out who my audience is, how many of you are new in this live stream? Because once the FOMC statement comes out, we're going to be going into a couple of other things. How quickly could that blue line come down to the extreme take and we get extreme news or something? The only way that this blue line right here would come down, okay, is if Jerome Powell says you're going to get your interest rate cuts this year, okay? If you get 2 rate cuts, the market wants 2 rate cuts, but there's speculation that we're not going to get it, guys. We're really not. Let's just quickly have a look at the ETF for a second, if there's any activity going off, because they've been relatively quiet on the ETF. Sort of new. Happy days. I'll take that. Tino, say well 3 times. Did that. All right. Someone's doing some deposits into Coinbase. Here we go. ARK is putting 800 Bitcoin into Coinbase wallet. Okay. It's not saying prime deposit. Don't know if that's the same thing. Okay. So Grayscale has been depositing. Okay, no, but that was 5 days ago. Yeah, in the last 4 hours, not really seeing that much activity on the ETF. Very light amounts as well. Yeah, they're holding out. I think that if they don't like the news, the ETF is going to drop. But then again, I've said before that I think they're actually hedging with the ETF. They're shorting Bitcoin futures, and then they're hedging by going long on the ETF itself. Yields are moving higher. Well, the yields right now are pretty much, yeah, they are coming up. But the thing you've got to be mindful of is this, the 10-year futures. Futures are trading out really well, all right? They're making a nice move to the upside. And when you see the stock market going down and then the futures markets of the 10-year note going up, it shows you investors aren't seeking high risk. They're looking for low risk. But something you do have to be careful of is when prices mark up, that's them selling. And that's on the basis of this chart right here. Because when this goes down, prices go up. And when this comes up, prices go down. All right. So this is sort of a metric to help us understand where we are with smart money, in the sense they're in that frequency of selling. So prices are going up. So remember, when they're selling, that's these guys up here. All right. They're looking to sell as prices appreciate. Okay. Yes, tomorrow is a bank holiday for the US, ladies and gentlemen. We've got US banks will be closed in observance of Juneteenth, National Independence Day. Low liquidity, irregular volatility, which implies that if they're going to make any movements, they have to do it today. And of course, Iran's talking about doing something absolutely massive on the day that the markets are closed. What a brilliant way to sabotage people in their investments. It's mad, isn't it? Absolutely mad. Final prediction. Nothing changes, then what? The market uncertain? Ha ha ha. It's true. That is it. It really will be like that. Tina, what do you think will happen to NASDAQ and gold when the options expire? Well, if they are in the money, then okay, that's great news. If they're out the money and based on whatever goes off with regards to the information we get very shortly, which is in 8 minutes time, then we're going to have ourselves a very interesting option story. All right, because if they don't hit their in their money calls, then boy, a lot of people are going to lose a lot of money. Circle is up. Yes, Circle right now is doing absolute wonders, ladies and gentlemen. Let's quickly have a look at Circle for a split second and just dive into that. Okay, then. How many we got in the live? 2,082. Mad love and respect for all of you passing through Circle, man. Do you actually believe that this stablecoin story is a mania? Do you think it's the next bubble? I don't know. Who's deep in with stablecoins? Look at that. Look at that. It's not stopping. I'm telling you, this is going to blow out Coinbase. It's already 50% of its price. Where are we at? Hold on. Let's have a look at Coinbase. Just under. And volume is not coming in. This is the problem, but volume is coming into this stock. It really is. They're killing it with this. Everyone's now trying to jump in with this Coinbase story. The Circle story. And now that the Genius Bill's been confirmed, it's just only a win-win for stablecoins, in my opinion, ladies and gentlemen. We're going up. Yeah, we're moving up. Look, whether we're going up or down, for me, until the data comes out, we're not going to know exactly what the hell's going to be happening. Yeah, they said that about AI as well. This is true. Yep, definitely a bubble. Okay. Circle and Coinbase made me 43K this week. Nice call. Thank you very much then. Happy days. Now, let's just quickly go over something where we are. Okay, we got 7 minutes until now. If you are new, ladies and gentlemen, just beforehand, if you are new to the channel, we're currently running a promotion. We've got the FOMC discount code, ladies and gentlemen. So if you want to become a platinum member, you get a 20% discount and you get that discount code, which is pinned to the top of this chat. It's FOMC20, all capitals, and it's only valid for today. Okay, so take advantage of that. I'm going to be mentioning it again later on, but the code is pinned to the top of the chat and it's in the description. Get yourself over to tradersreality.com and you get access to all these fun and games, setups. You get the weekly wrap-ups and then the market watch. And then, of course, you get access to the Discord where there are some really good traders in there of the hybrid system. You also get the PDF library where it gives you all the strategies that I've come with in regards to the hybrid system and a breakdown of each one. So right now, there was a V-shaped reversal on the NASDAQ. If you had the checklist, you'd understand exactly what you're looking for with regards to that. So check that out, ladies and gentlemen. The discount code is pinned to the top of the chat. All right? Happy days. Now, Bitcoin. How many of you are trading Bitcoin? How many of you are trading NASDAQ? How many of you are doing it? Because you can, of course, trade it on BTCC. We're doing the adverts, ladies and gentlemen. We got to do it. But you can see here, you can trade it on BTCC and, of course, stock as well. Now, you can short MicroStrategy, you can short XRP, because those are the two assets that I've got a bone to pick with, and I don't like them. You would have been able to exploit Oracle on its mad move if you were able to trade it on their news announcements. They made some significant movement up. So if you do want to trade stock and Forex with the same account with cryptocurrency, no KYC is required with these guys. And if you join, use the Traders Reality link, which is in the description of this live stream. Now that's done. Now, listen, we're going into it all. We got 5 more minutes until the actual FOMC statement and the federal funds rate, and of course the projections. Once all of that comes out, I'm going to be scouring for the information. What's this? Iran's mission to the UN says Tehran will not negotiate under duress. Well, what does that pretty much say to you? It's going to get... Do you know what will be brutal if we get something whilst the FOMC is happening? You know, that'll be absolutely crazy if something happens during that time. But anyways, once we're done with this information that comes out very shortly, all right, I'll be going into a little bit more on cryptocurrency. I'll be taking questions on specific assets regarding crypto. We're going to be looking at total market caps and the relationships there on what you need to look out for, okay? And of course, any altcoins that you guys are probably wondering whether or not you need to put in the bin, like XRP, then I'll be able to dive into that and take questions on that. All that time will take us towards the actual press conference and then we'll be listening on Powell. So through all of that, ladies and gentlemen, make sure you're liking the stream. There's 600 of, right, you know what? I'm not even going to talk about altcoins unless we get 2,000 likes. That is so dead. You're here, man. Just like the stream. It's free. Do it. No, only like it if you like it. If you don't like it, I mean, don't like it. Still engagement, ladies and gentlemen. We're playing the algorithm. Here we go. Okay, then. So NASDAQ and Bitcoin will try to exploit Bitcoin FOMC move soon here. Small size, high leverage could be good or get swiped. Look, guys, how many of you are actually in high leverage trades right now? You know, I'm looking, you're trading ETH, trading Bitcoin and ETH. Hold on, we got a question here. It's only your first month, 20% discount on your first month, my friend. Can you talk about XRP? No, I've already spoken to you about XRP. I forbid XRP. I mean, if you are an XRP holder, I'll quickly show you what you need to know about XRP. Okay, so I'll just go over to this. I mean, well, yeah, this is XRP's price action, but if you go over to USDT, you'll probably see the same thing. Okay, it's there. All right, there's XRP behavior. It's more volatile than XRP. Don't wind me up. I'm not interested in XRP. Never. I'm not doing it to myself anymore. Okay. Yep. So no, Stacy, you really wouldn't. You really wouldn't want to. Let's just quickly go into Ethereum. Do you know what? Ethereum has been the one that's been bugging me the most because it's just not going anywhere. It's been saying sideways, absolute sideways. Right, what's NASDAQ doing? NASDAQ is making a bit of a move. All right, ladies and gentlemen, we're getting into it right now. We're going to get the FOMC statement, press conference. No, not press conference. Statement, summary of economic projections. And we're going to see exactly what the market is going to like with or without it. So here we go. So let me just get this up for my Bitcoin guys. Let's have a look. The Bitcoin is going to be on the left. I'm going to have NASDAQ right here just to pay attention to it. Okay, so we're just going to wait and see what they have to say about this. You know what I've been seeing a lot of? I've been seeing a lot of companies like banks. They've been upgrading their targets for certain assets. Barclays have just come out saying Wix.com stock rating with a $240 price target. So they're putting a lot of stocks up. Here we go. Watch this madness unfold. Wait there. Yeah, we'll leave it at that. We'll leave it at that. Here we go. 1 minute, ladies and gentlemen. 1 minute. Come on. 1 minute. How many likes can we get? You know what? Don't worry about it. Here we go. We got some movement. NASDAQ is being very choppy right now. And we should get the information very shortly on what the story is. Oh my days. Here we go. This is exciting. Are we going to get the cuts? Pause. Should be in. Come on, NASDAQ, do it. Is there going to be an order that pops in? Come on. Come on. Here we go. Oh, that's crazy. Oh, here we go. Do you like it? US interest rate decision, 4.5%. That's fine. Yeah, we know that. They're now registering what they're saying in the press, in the actual projections and the statement. NASDAQ doesn't like that. Come on, NASDAQ. I know you want that. Come on. It's going up. First move is the false move. Come on. Is it? Give me something. Waiting for the information to come out, guys. 4.5%. We know that. Nothing has been said just yet. Nothing is being disclosed. I'm not getting anything yet. Nothing. That's a very muted response. That is very muted from the NASDAQ. That is no good at all. Oh my days. Here we go. Median forecast shows rates at 3.6 in 2026 and 3.4% in 2027. Okay, so 3.6% in 2026 and then 3.4 in 2027. Oh. 1 point. That's not making sense. 1 whole point in a year's time. 50 basis. Okay, median forecast still shows 50 basis points of rate cuts in 2025. Okay, so that's good news. But is it going to be September or December? Which one is it going to be? Market's not really reacting. 50 basis point cuts in 2025. Uncertainty about outlook has diminished and is still elevated. So even if they are going to give us the cuts, they're not really... That is rough. That's not ideal, ladies and gentlemen. So they're going to do 50 basis point cut, and then that's it. They're going to hold out. That's not good. I don't like that. December, 100%. All right, wait there. Let's just have a look here. Have the bets come in. Let's just refresh this for a second. Have the bets come in. That is wild. All right, so that's where we are right now with the bets, okay? Cool. So July, what's the expectation? 85%, 4.25, 4.5%. That's correct. Right there. Cool. Now, September. Hasn't budged. Hasn't budged yet. Fed admits line about risks of higher unemployment and inflation. All right, he's going to be giving us a really dead discussion. He really is. I'm telling you. Right, guys, you know what? This FOMC, right? See, look, I knew it. I knew they were going to do it. Fed sees 1.4% GDP growth in 2025 versus 1.7. All right, then, ladies and gentlemen, here we go. Here's the dot plot. Remember the dot plot that I showed you earlier on, guys? Remember we were talking about this in the live stream this morning? So this is where the Federal Reserve members are. So you might not be able to see it, okay? But you can see that they're in the range. Yeah, they're all about that 3% down there. In the longer run. Sorry, over here. Yeah, look, 4% region. Look at that, 4.5. Going into 26, there is a bit of an adjustment lower. US future rates factor in 46 base point cuts in 46 BPS in rate cuts in 2025. Little changed from before Fed statement. So inflation remains somewhat elevated. I flipping hate hearing that comment. We know. Unemployment rate remains low and the labor market conditions remain solid. It's going to be one of those lives, ladies and gentlemen. We're just going to have a bit of a laugh and a joke about everything. Honestly, the dot plot is saying that Fed members feel like it's going to be higher interest rates. But in the longer run, if you look down below, in the longer run, they're all skewed to the idea of 3%. But that's in nearly what's the longer run? That's the problem. Right. What is NASDAQ doing? Let's have a look if NASDAQ's doing anything. NASDAQ, they don't like that. They don't like that. Recent indicators suggest that economic activity has continued to expand at a solid... Oh, yeah. So much for your solid pace. Yeah. You've got a war. All right. Where's Bitcoin? You've got a war going off. Yeah, they're not. How is your economy doing great at this time? It doesn't make sense. No, this is, oh God. When those deals get finalized, it's not going to make a difference, right? The deals that they're talking about are not the ones that we want. We need euro. Euro's going to be the deciding factor. It really will. October rate cut odds rise to 8. Knew it. They rise to 85% versus 80% before the Fed statement. Fed projections show slower GDP growth, slightly higher unemployment, and somewhat higher inflation in March forecasts. Welcome to stagflation, ladies and gentlemen. That is stagflation right there. God's sake, man. The Fed sees a 4.5% unemployment rate at the end of 2025 versus 4.4 in March projections. Powell has got to really convince the market right now. He's really got to convince the market. Gold. Let's have a look at where the market is right now for gold. Has gold done it? No. What is going on? They're not moving gold. Platinum off. Yeah, look at that platinum. Platinum's making, look at that move, man. What an asset. Beautiful. Absolutely brilliant price action. Gold, it's just too many people are just picking it up, man. Tesla is up 2%. Nvidia is pulling back ever so slightly on the hourly, but not really doing too much right now. Nvidia, Nasdaq's coming back. The volatility index is starting to move up a little bit. The Chicago board one is trading negative 5%, but it's not really doing anything. The SPX, not really doing too much. The futures markets are going up right now. The 10-year yields, where we at? The bond market is going up. The yields are trading lower, but they're going into the 10-year futures, so they could be coming out of high risk to go into low risk, which is why the bonds are going up. Okay? Remember, you've got that relationship. You've got in low risk, high risk. And if you've got one that's moving up, which is low risk, but you don't have the high risk going in alongside it, it tells you that investors, they're not really liking the high risk factor right now. So that's what we're really getting right now with this. Let's just go to the yen. The yen's up, man. The yen's moving up 0.5%. Let's go over to the euro for a second. That's trading up a little bit more. Bitcoin, where you at? Bitcoin not doing anything, absolutely anything. We're not so much cooked, ladies and gentlemen. We're not really that cooked. Let's be honest now. Yeah, platinum, it is brilliant. Traders still almost fully priced in 2 Fed cuts in 2025. So traders have priced it in. So that logic suggests that maybe everything's going to come down. By the way, you got a war. So let's see if there's any news announcements on that. Here we go. Just in, Iran restricts intersect access nationwide. Interest access nationwide. Oh, man. I'm not liking it. Yeah, the press conference is coming out in the next 20 minutes. Okay, ladies and gentlemen. No, the end is not near. Remember that. Don't worry about it. Okay, so for my guys, how many of you are, of course, we've got the FOMC press conference coming out in about 25 minutes time. Okay, so how many of you are altcoin holders? Of course, you're altcoin holders, but how many of you are in the position where you're going to be getting rid of your bag because you're just not liking where the story is right now? So first things first, as an altcoin holder, what you're going to be paying attention to, Bitcoin dominance. So Bitcoin dominance for me is, of course, I'm waiting for it. I've got a logic that I'm expecting Bitcoin dominance to get to around 70%. I think that's what's going to happen, 71 in that region, because there is going to be an instance when the demand for Bitcoin is going to be so sought after that they're just going to go to it. They really are. Okay. Now, with regards to the Genius bill, okay, cool. But it's when companies start actually getting the Bitcoin. GameStop, I think that is all completed now with their bill to raise capital to buy Bitcoin and offer it in shareholdings as such. So it's going to be a very interesting story. So this is what I like to do when I'm dealing with altcoins, ladies and gentlemen. The first thing I like to do is go over to the total market cap. We know the total market cap for cryptocurrency is 3.19 trillion. I'm not interested in that. I'm not interested in the market cap excluding Bitcoin. I'm interested in the altcoins. Now, where's the money? Excluding Bitcoin and Ethereum, okay? Right now, it's $816 billion, okay? Now, the first thing you want to do is you want to ask yourself, where are you relative to key moving averages with this market cap chart? Nowhere, really. It's flat, all right? So there's a lot of accumulation, a lot of distribution. However, looking at this, if they do sustain this move to the downside and they lose this market cap region, we're probably going to be coming down, ladies and gentlemen. So a lot of altcoins will experience a bit of a discount. But what you are primarily looking for is as follows. If you notice, for every time we trade below the moving averages, price will revert back up, okay? Comes down, reverts back up, down, back up. Don't make the mistake of buying an altcoin and holding it and letting it run. You witness it come up, buy some more, sell some more, okay? You've got to be, in my opinion, the money that you would be waiting for, in the other words, if price of your altcoin starts here and you wanting it to go all the way up here, but in the meantime, what it's going to do is this. So it makes a move up and then it comes down, comes up, comes down, comes up, comes down, and then you've got this madness. Whilst you're holding on to all of this, for every dip, buy it, sell it on the retrace. Dip, buy it, sell it on the retrace. That's what you really want to aspire to do. Rather than holding it, buying it, buying it, buying it, losing value, because you might get put into a position where you can't buy anymore. And then what if it keeps on going further and further against you? So if you're really going to be playing the altcoin game, I mean, I've got an expectation that the altcoin market is going to stab 600 billion. I actually believe it, because we've had a rally to the upside. They've oversold everything, and now they're just accumulating it and buying it all back up again. So now where we are is the moving averages. When they break away from this, all right, you can make money on it. Of course, it's all about whether you are buying the coin for the future or you want to make money. In other words, it doesn't matter the direction it takes, because if it rallies and we're in an upwards market, you're buying the dips, you're selling the rallies. Happy days. If it is going to the downside, you are buying the dips, sell the rallies. It's the same thing, and you're achieving the same thing. But the problem is most people will hold on to it, not take any profits. Never will they start buying it as it goes down. And then never will they sell it as it comes back up, because they're going to hope it's going to take that range and continue to the upside. So your expectation of the long term is always being ingrained, and you're married to the bag. But again, it all depends on the style of trading that you are and the style of investor that you are. Okay? You could still get a bit of a discount, ladies and gentlemen, on your altcoins. And that's what I'm looking at over here. Okay? Now, going back into it. Altcoins, where we at? What would you like to see? Alts don't pump anymore. They don't. They really don't. Okay, so do you have anything you want me to look for? Okay, I'm going to have a look at the first altcoin. I've got a couple of altcoins in this. Let's see the best performing ones. Crow is actually doing nothing. Okay, so it's actually showing you exactly what the altcoin market cap is doing. It's pretty much the same. We got Cada, right? Cadena, it's trading below the moving average. Okay, it's like I said, look, down in. I mean, you might not get the best retrace, but you really want to see significant retraces. ETH and SUI. Okay, so let's just have a look at Ava. Look, flat. Most of you are probably cheesed off with your altcoins right now. They are bleeding out quite a bit. I mean, Zcash is doing really well right there. Okay, SXP moving away from it. Okay, what we got? Filecoin. Let's have a look. Here we go. Let's have a look at Sol. So 145. That's where we are with Solana right now. That is pulling back. Cloths count 12 today. Yeah, my guy. How you doing, man? It's a long time. XRP. It's a shame about your name, my friend. Fartcoin. Let's have a look at Fartcoin. No. No, oh, sorry, Fartcoin. There we go. I was going to say, no way. All right, then, here we go. Now, this is on the daily time frame. All right, then, let's look at that. So we've got a couple of levels on Fartcoin right now. Not really doing too well in that sense. I've been marking levels, but look, when it comes to price doing this, you're looking for bid side right here. You're looking for bids at that 87 mark, and be accepting that it can go down to that. Be accepting of it. Now, whether you are of an idea that the altcoins are going to burst, the altcoins are going to burst, look at what's going on with what's happening in crypto, ladies and gentlemen. Your logic of the altcoin season is done. All right? It's a case of whether money's going to come into the market or not. That's all it is. All right? Because ain't no one selling Bitcoin, quite frankly. No one, in my opinion, will sell Bitcoin to go into an altcoin like Fartcoin for the long term, in my opinion. What else we got? Bitcoin Cash. Let's have a look at Bitcoin Cash right now. Where we at? Okay, 15 more minutes, ladies and gentlemen. Bitcoin Cash is actually performing so much better than Bitcoin, in my opinion. Quite a choppy asset, trading within psychological ranges. Just looking at it on the bigger time frame, you can see it's doing really well right there. Close to its all-time high. Not so much all-time high, but it's getting close towards these levels. But again, you find yourself an altcoin, okay, that forms certain structures, whatever interest there is in the altcoin, you're buying your dips, you're selling the rallies. Buy the dips, sell the rallies. That's all you've got to do. You've got to have a short-term mentality with the way the markets are operating in crypto right now, because your dominance is going to shoot up with Bitcoin. The Genius bill, you've also got with regards to stable coins and what have you. And then, of course, you've got GameStop with the bill to get more Bitcoin, MicroStrategy buying Bitcoin, ETF Bitcoin. Where are the altcoins? We need the Solana ETF. That might give the altcoins a bit of a boost, but it's a different story. BCH, yep, just looked at that for you, my friend. So, yeah, Bitcoin Cash, you can see what it does. Pumps, retraces, you're buying these dips. Pumps, retraces, you're buying these dips, you're selling the rallies. Buy the dips, sell the rallies. And altcoins that are outperforming the general altcoin market, pay attention to them. This one is outperforming the general market because all the altcoins right now are trading below the moving average. This is above it. So we've obviously got this rally happening in Bitcoin Cash. Okay. What else we got? Casper. I'm just seeing any altcoin that I see coming into it. Here we go. Mexi. We got 0.07. Okay, it's coming back down again. The thing is, you're going to see the same thing with most altcoins, ladies and gentlemen. That's all you're going to see. You're going to see the same structure over and over again. Checks Curve. Okay, then. Curve coin, USDT. Right. Staking platform. Stake Curve Finance. When you've got the total value locked in DeFi, okay, when that is increasing, then it's time to get involved in the altcoins, in my opinion. In terms of staking, when the total value locked in the actual DeFi markets, when that is increasing up, happy days. You've got a good story for the altcoins, in my opinion. What else we got? Theta. Let's have a look. Theta to the moon. What moon are you talking about? Uranus. I know it's not a moon. But it's not looking too good with that. It's not looking too good. I mean, it is not 67 cents. Prospect of it going even further down. I mean, it's come from a nice run. It really has. And there's nothing stopping it from going even further. There's nothing stopping it at all. And you've got to accept that. Let's have a look. Monero. Doing fantastic right there. You think Bitcoin Cash could become valuable if Bitcoin is too high? Well, it's only if it does come. Listen, they're trying to do that right now with the ETF. Think about it. The ETF right now is $67, $68, whatever it is. Let's just quickly have a look at the ETF. The ETF is right now $59.30. That is exposure to Bitcoin from Wall Street's perspective. All right. Bitcoin Cash, fundamentally, you think, okay, it's like Bitcoin, not like Bitcoin, but you get the idea. It's relatable to Bitcoin. So people might think, okay, if Bitcoin goes up, Bitcoin Cash goes up. Well, why am I going to get involved in that? I may as well just go over to the ETF and get involved in the Bitcoin itself, but just hold the contract, which is much cheaper than buying the Bitcoin itself. See what I mean? I get why you think that, but if that was the case and we didn't have an ETF, then that logic would hold true. But it's being applied to the ETF, and that's what we've got right now. Tau looking strong. Let's have a look. Is Tau looking strong? Let's have a look at that. Where we at? Here we go. 10 more minutes, guys. None of your yeah, look, your altcoins are looking relatively strong. I mean, Tau is looking all right. I mean, remember when this came out and it was just wild, but it's consolidating relatively well. But again, this is about most altcoins are about the technology for me in principle, because the only reason why an altcoin would pump is either the markets are all optimistic or something significant is happening in the altcoin from the developer's point of view. They're introducing something. They're going to give access. They're doing unlocks, whatever it is, or new developers are coming in to develop something to make it worthy for you to go and buy it. That's the only time, in my opinion, when altcoins will actually make movements. So they are going to act like stocks. You've got thousands of stocks in the stock market, but then one day you open your charts and you see a stock's moved up nearly 1,000%. Why? Because they just got an FDA approval for a drug that they want to advertise and sell for weight loss. Okay? But you had no idea about the company beforehand. It's got a $19 million market cap, and you're like, what the hell is this stock? But it's moved up 1,000%. That, in my opinion, is how you should approach altcoins. Dive into what's going on behind the scenes. Look at your developers. Look at potential unlocks. Look at anything that is changing in the atmosphere of the altcoin, and then see if you can exploit that development. Otherwise, Bitcoin dominance up, altcoins down. That's the story for me, ladies and gentlemen. H-bar. H-bar is a tough cookie. It really is. H-bar is a tough cookie. It's doing really well. It's holding on to these gains. And I would like it to actually stay within this range. It's mimicking Bitcoin price action right now. However, if we do lose this going down into the 10 cents mark again, that for me would be a good discount on H-bar, quite frankly, because it does recover the majority of the move till it comes back into the consolidation area where value or perceived value was picked up. Okay. Remember, the idea of support and resistance for traders should really be based on the interpretation of perceived value. That's how you've got to look at it, all right? And then look at what's going on across the board and then say, okay, if everyone's in the buying mood, that support zone would be an area that I could assume that it's going to do well from, okay? And then marry up what's going on in the company, marry up what's going on in the marketplace. And then when you look to the support and resistance, then you say, okay, there's my logic. Don't blindly come to the chart and be like, there you go, that is a support or a resistance point and it's broken it, fine, okay? Add more weight to it, ladies and gentlemen, okay? Let's have a look. Where are we at right now? Going into it all. Let's have a look. Bitcoin not really doing too much right there. Just quickly having a look at the NASDAQ in a second. Hold on. NASDAQ not really doing anything yet again. Okay. What do you think of the idea that the AI market follows the Russell, at least in sentiment and environment? You got to think of it like this, Peter. The Russell index itself is, of course, is 2,000 stocks, a lot of stocks in that. And then you've got the S&P 500. But you will always get the NASDAQ moving up and down like crazy, whether it's on good volume or bad, all right? Focus on the S&P in terms of volume, all right? Because that tells you where the money's really going, because NASDAQ is very light relative to the S&P, all right? Because you've got more companies that have got bigger market caps in the S&P, all right? It's the top 500 US companies, okay? So, you know, it's using AI to mimic what's going on with Russell. Well, you've got a lot of AI stocks in there anyway. But I think when the Russell pumps, it's a case of the bigger stocks pumping and AI kind of follows suit. See what I mean? Because AI is continuously evolving, people are going to get used to the idea that something new is happening all the time in AI. So because the bar keeps on getting raised every single time when you've got a new model coming out every 5 minutes, it's like a new iPhone. In the end, you just get bored of it. And it turns out just to be a camera. That's all you're upgrading, the pixels on a camera. End of. Okay, the operating software. But you don't need to have the latest phone to enjoy that. You just have the old phone. You see what I mean? So that's how you got to really approach it, in my opinion. Check Jasmine, please. Jasmine, you know what? It's funny. I haven't actually looked at Jasmine because, all right, going to be starting soon. I haven't looked at it, given the activity behind the Japanese yen. Okay, it's not really doing that well. I mean, a lot of people were banging on about it, but it's come back down a little bit. Can't complain too much, but when it started off, it did really well again. Well, it pretty much followed the Japanese yen, of course, but I think if the yen starts to move up and the yen's got their business down and they're not buying bonds as mad as they are and everyone starts picking up yen, I think Jasmine Coin would start the benefit of that, I think. I think it would enjoy that. Okay then. Tino, I want a foldable Z6 Android phone. Okay, we'll arrange that for you. No problem. Any questions, ladies and gentlemen, before we actually get into this? 2,500 of you in the live stream. Mad love and respect, guys. We're going to be getting into it. Looking at the news across the board right now, I'm not really seeing anything. Iran summons Swiss envoy in Tehran as representative of US interests to protest Trump's provocative remarks. Oh, Trump, man, please don't start a... Oh, God. He's going to start a madness. Let me just have a look at the liquidations on Bitcoin right now. Hold on. Just have a look at the liquidation levels. Where are we at? 5 minutes, guys, till the FOMC starts. Here we go. Okay, then. A lot of margin down there, man. I'm not liking that. I hope they just go for the shorts, but there's a lot of margin down there. I'm not liking that. There's a lot of margin, given that they now know about the rates. Okay? Okay, now that interest is out, what happens to USD JPY? Great question. Here we go. So, dollar yen. Dollar yen won't move until there is a trade deal with the Japanese, all right? And dollar yen can just consolidate. And if you notice, dollar yen against the dollar dominance itself, even though the dollar dominance is going down, dollar yen, it seems to be balancing out and it's not really doing too much. It is trading negative, but it's holding in this 140. This is a massive area $4 yen right here. It's a huge area of support. So logic says that dollar yen could effectively start marking higher, which could be the carry. Because if the dollar's going up, the yen's going down, it could imply that investors are going into yen to exchange it over to dollars, put those dollars to work into the stock market, all right? But they can also go to the dollar as a safe haven, and dollar has not been a safe haven. So if you see the stock market going down and the dollar going up, you've got dollar back in charge as a safe haven, because the yen and the dollar are safe havens, but the dollar hasn't been behaving like a safe haven. Once we've got a deal with Japan, you'll start seeing dollar yen moving properly then. But for now, I don't think you're going to see it doing too much, in my opinion. Tina wants to get me liquid. No, don't. You ever just think, I cannot be asked with these BS markets? Of course, man. Are you interested in stocks or crypto? I'm interested in anything that moves, guys. Anything that moves. If I could trade oxygen, I'd trade it, you know? And the thing we're going to do right now is we're going to get ready for FOMC. So you've got 3 minutes to get this party started. Get yourselves your drinks. Get yourself comfortable. We're going to be tuning into the good old Jerome Powell. Powell. I've missed you, man. I have missed my good friend Powell. Where are we at with it? Here we go. Get this sorted out right now, ladies and gentlemen. We're going to be doing the sound checks. Would you trade Fartcoin? I would trade Fartcoin. I really would. I would trade Fartcoin. Here we go. Oh, my days, ladies and gentlemen. Where is NASDAQ? What's NASDAQ doing? You absolute nut job. I'm just going to put this here for NASDAQ. We've got Bitcoin's price right there. No, I'm not going to go on the 13-hour time frame. No, we're going to go to the hourly. Just understand what we can expect from Bitcoin over here. We're going to keep Bitcoin's price right there, ladies and gentlemen, so you can see it right there. We'll have that. Now, yeah, we'll put that over here. This is Bitcoin's price, of course, FOMC. We'll put NASDAQ down there, and then we've got the FOMC right there. Okay, ladies and gentlemen, this is it. Mister, thank you very much for that. Happy days. Will it be a dove or a hawk? I believe after this information that we've just received, okay, the Fed's got an expectation that the economy is weaker, okay? So it's going to be an interesting one to hear what Powell has to say. But then again, they have been saying it's been weaker. We know it's weaker. Your GDP is down, and it's down the lowest since 2022. So makes sense, doesn't it? It makes sense. Never mind. You want Fartcoins as platinum setups? Yes, I can give you the Fartcoin setups if you want. If you're really desperate for the Fartcoin setups, then I will look at the Fartcoin setups as well. Okay? Remember, if you are new and you haven't done so, use the discount code for the platinum membership. Okay? You get 20% off, and it's only valid for today. That's in the description of this live and pinned to the top of the chat. It's FOMC 20 full capitals. Okay, so take advantage of that because it's finished tonight. Finishes after the live in principle. Well, today. J Power is stupid. Tino looking up to someone and winking. No, I'm not looking up. No. Oh, here we go. Never mind. Here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I'll have more to say about monetary policy after briefly reviewing economic developments. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were driven by businesses bringing in imports ahead of potential tariffs. This unusual swing has complicated GDP measurement. Private domestic final purchases, or PDFP as we call them, which excludes net exports, inventory investment, and government spending, grew at a solid 2.5% rate. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a decline in sentiment over recent months and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.4% this year and 1.6% next year, somewhat slower than projected in March. In the labor market, conditions have remained solid. Payroll job gains averaged 135,000 per month over the past 3 months. The unemployment rate, at 4.2%, remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.5% at the end of this year and next, a bit higher than projected in March. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.3% over the 12 months ending in May, and that, excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up over recent months, as reflected in both market and survey-based measures. Respondents to surveys of consumers, businesses, and professional forecasters point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 3%, somewhat higher than projected in March. The median inflation projection falls to 2.4% in 2026 and 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to trade, immigration, fiscal, and regulatory policies continue to evolve, and their effects on the economy remain uncertain. The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level, and thus of the related economic effects, reached a peak in April and have since declined. Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It's also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored.
This is important, what we needed to hear from them.
Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance.
Oh, my days.
In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year, the same as projected in March. The median projection declines to 3.6% at the end of next year and to 3.4% at the end of 2027, a little higher than the March projection. These individual forecasts are always subject to uncertainty, and as I've noted, uncertainty is unusually elevated. And of course, these projections are not a committee plan or decision. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on issues related to assessing the risks and uncertainties that are relevant for monetary policy and the potential implications for policy strategy and communications. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference that we held last month. We are open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up any modifications to our statement on longer-run goals and monetary policy strategy by late summer. After that, we will consider enhancements to our suite of communications tools, including the SEP. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals.
Thank you, Fed.
Thank you. I look forward to your questions.
What's boring. I don't like him anymore.
Thank you. Colby Smith with the New York Times.
Come on, New York Times.
To what extent has the more limited impact from tariffs at this stage on inflation changed your view on what the ultimate economic fallout will be from these policies and the timing of when they will materialize in the data?
So we've had 3 months of favorable inflation readings since the high readings of January and February, and that's, of course, highly welcome news. Part of that just is that services, core services, both housing services and non-housing services, have really been grinding down toward levels that are consistent with 2% inflation. So that's the good news. We've had goods inflation just moving up a bit, and of course we expect, as you point out, we do expect to see more of that over the course of the summer. It takes some time for tariffs to work their way through the chain of distribution to the end consumer. A good example of that would be goods being sold at retailers today may have been imported several months ago before tariffs were imposed. So we're beginning to see some effects, and we do expect to see more of them over coming months. We do also see price increases in some of the relevant categories like personal computers and audiovisual equipment and things like that that are attributable to tariff increases. In addition, we look at surveys of businesses, and there are many of those, and you do see a range of things, but many companies do expect to put all or some or all of the effect of tariffs through to the next person in the chain, and ultimately to the consumer. Today, the amount of the amount of the tariff effects, the size of the tariff effects, their duration and the time it will take are all highly uncertain. So that is why we think the appropriate thing to do is to hold where we are as we learn more. And we think our policy stance is in a good place where we're well positioned to react to incoming developments.
So in terms of how we should interpret the rate cuts penciled into the SEP, is this reflecting that there's this expectation that underlying inflation will just stay well enough contained that allows the committee to eventually move ahead with those cuts? Or is it about, responding to a deterioration in economic activity, let's say? I mean, how should we make sense of the forecast?
So if you look at the forecast, you will see that people do generally expect inflation to move up and then to come back down. But we can't just assume that. Of course, we don't know that. And, our job is to make sure, one of our jobs is to make sure that a one-time increase in inflation doesn't turn into an inflation problem. And that, again, that will depend on the size of the effects, how long it takes for them to come in, and ultimately on keeping inflation expectations anchored.
What a guy.
Hi, and thanks, Chair Powell. Howard Schneider with Reuters. If you look at the rate path starting in December to today and adjusted over the full time horizon you've got there, you've taken about a quarter point per year out of your projected path, and you end at a higher rate at end 2027 than you would have in the prior forecast. Is that a result of a sense that tariffs will lead to more persistent inflation? Is it a result of reassessments of where your short-term neutral rate is? Why are you on a slower path now?
So I would focus most on the nearer term. As you get out to the later years, it's hard for anybody to know where the economy is going. You didn't see people moving their longer term, estimate of the neutral rate, for example, at this meeting. So and those things are probably slow moving. So I think if you look at what's happening here since March, this is since March, right? You see a little slower growth, just a tiny tick up, a 1/10 tick up in unemployment, and you see inflation moving up 0.3. And by the way, it was a similar move from the December SEP to the March. So that's what you see. You see the effects of tariffs. I think we learned in April, after the March meeting, that substantially higher tariffs were likely. And then since then, the estimates of where the tariffs will be have actually moved back down, although still at an elevated level. So we're adapting in real time. And what you see is an accumulation of individual assessments.
You say in the statement that risks have diminished on that front, but the July 9th, drop dead date for all the Liberation Day tariffs is still out there and unresolved. You've got now exchange of missiles between two Middle East adversaries with a possible U.S. involvement. How can you justify saying that risks have diminished?
So what we said was that uncertainty uncertainty about the economic outlook has diminished but remains elevated. Many surveys say that. They do. So, and that's actually a line from the Teal book, which you can see in 5 years. Remember to check that.
Maybe the world will be over.
First time I've heard him crack a joke.
But if you think about it, tariff uncertainty really peaked in April, and since then has come down, and that's really what that's just acknowledging. It's diminished, but still elevated. That it's uncertainty. So I think that's an accurate statement.
Diminished but elevated.
Thank you. Chris Rugaber at Associated Press. There is an argument out there in favor of cutting rates more immediately. Inflation has continued to cool and is back to roughly 2% despite the tariffs. And I guess I also wanted to ask about cracks in the job market with gross hiring slowing, concentrated in just a few industries. We've seen some housing data, including this morning, that have been pretty weak. Do you see any concerns that the economy is weakening and that is a reason to cut rates going forward?
So we do of course monitor all those things. I think if you look at the overall picture, what you're seeing is 4.2% unemployment and an economy that's growing at a rate hard to know given the unusual flows in the first quarter, but it appears to be 1.5–2%, maybe a little better than that. Sentiment has come up off of its very low levels. It's still depressed. So you can point to things. The housing market is a longer run problem and also a short run problem. I don't think it's indicative of basically the situation is we have a longer run shortage of housing. And we also have high rates right now. I think the best thing we can do for the housing market is to restore price stability in a sustainable way and create a strong labor market. And that's the best thing we can do for the housing market. You asked about the job market. Again, look at labor force participation, look at wages, look at job creation. They're all at healthy levels now. I would say you can see perhaps a very slow continued cooling but nothing that's troubling at this time. But we watch it very, very carefully. So overall, again, the current stance of monetary policy leaves us well positioned to respond in a timely way to economic developments. And for
why
now,
is he
and
repeating it?
we'll be watching the data carefully.
Well,
Hey,
just quickly
there it is. Data.
Given that there are concerns inflation will rise, but there is the alternate scenario that tariffs would create demand destruction and slow growth sufficiently, and that would perhaps keep a bit of a lid on inflation. Do you see odds of that scenario? What kind of odds do you see of that scenario coming true, and how many months of cool inflation would you need to see before concluding that maybe that lower inflation scenario is taking place?
So this is very much the conversation we had today and yesterday. There are many, many different scenarios, many combinations of scenarios where inflation does or doesn't prove out to be at the levels we think, and where the labor market does or doesn't soften. And I think what you see people doing is looking ahead at a time of very high uncertainty and writing down what they think the most likely case is. No one holds these rate paths with a great deal of conviction, and everyone would agree that they're all going to be data dependent, and that you can make a case for
I'm waiting for Trump to
for
say
any
something.
of the rate paths, I think, that you see in the SEP. And we do this once a quarter. It's a hard thing to do particularly at this time, but it does reflect. If you see somebody writing down a rate path that involves cuts, that's them saying, yes, I think we will get to a place, more likely than not, where cuts will be appropriate. And it could be a joint probability of a number of possible outcomes. Again, remember how much uncertainty we face, though.
There's no vibe in this FOMC anymore.
Mr. Chair, I wonder if you could describe for us some of those scenarios. How do you get to a place? I'm noticing that the uncertainty levels in your forecast are very high. How do you get to a place where you have the confidence in the outlook for, say, inflation and or growth or the unemployment rate? How many months does it take, and what do you want to see in the data to get to that level of confidence to actually reduce rates off the restrictive level?
So it's very, very hard to say when that will happen. We know that the time will come. It could come quickly. It could not come quickly. As long as the economy is solid, though, as long as we're seeing the kind of labor market that we have and reasonably decent growth and inflation moving down, we feel like the right thing to do is to be where we are, where our policy stance is, and just learn more. And in particular, we feel like we're going to learn a great deal more over the summer on tariffs. We hadn't expected them to show up much by now, and they haven't. And we will see to the extent to which they do over coming months. And I think that's going to inform our thinking, for one thing. In addition, we'll see how the labor market progresses. So at some point, it will become clear. I can't tell you exactly when that will be.
What a wishy-washy
meanwhile,
way
we'll be
to say that they're not going to
watching
cut.
the labor market very carefully for signs of weakness and strength, and tariffs for signs of what's going to happen there. And of course, there are many developments ahead. Even in the near term, developments are expected on tariffs. So I think we don't yet know with any confidence where they will settle out. We have an estimate, and it's I think all estimates are now pretty close together, but it's again highly uncertain.
When you say estimate of the impact of tariffs on the core PCE, is that what it is? And could you share that?
What you start with is what's the effective tariff rate overall, and people are managing to that. But the pass-through of tariffs to consumer price inflation
This is his way of
is a
getting
whole
back at
process
Trump.
that's very uncertain. As you know, there are many
Called him
parties in that
stupid.
chain. There's the manufacturer, the exporter, the importer, the retailer, and the consumer. And each one of those is going to be trying not to be the one to pay for the tariff. But together, they will all pay for it together, or maybe one party will pay it all. But that process is very hard to predict. And we haven't been through a situation like this. And I think we have to be humble about our ability to forecast it. So that's why we need to see some actual data to make better decisions. We'd like to get some more data. And again, in the meantime, we can do that because the economy remains in solid condition.
They never talk down of this economy, but there's so much uncertainty. It just doesn't make sense. Is this Nick?
Nick Tamarosa of the Wall Street Journal.
I like this guy.
Chair Powell, I guess I'm wondering if you could explain a little bit more the divergence we see in the dot plot, particularly around the
Nice.
2025 rate projections. I realize this is, you have one group of officials that are putting down no cuts, another that are putting down more than one. And again, recognizing that could be difficult to summarize, but is it a matter of
They ain't the
people
same,
having
man.
a different outlook or a different reaction function, a different commitment to defending against another inflation mistake? How did that play out over the last 2 days?
So you're right. This is often the case. We have a pretty healthy diversity of views on the committee. We did have strong support for today's decision and broad agreement that our policy stance does leave us in a good place. But I would point to two factors, and you mentioned them. The first is just that parties have a diversity of forecasts, and they do align with where their dots are. So if you have a higher inflation forecast, you're going to be less likely to be writing down, more cuts. But remember, as we see more data, we're going to learn more about where inflation is headed, and that means when it is time to look at resuming our normalization process, the differences you see should be smaller because we'll have seen actual data. Right now, it's just a forecast in a very foggy time. So that's the first part, is forecast. Secondly, people can look at the same data and they can evaluate the risks differently, as you know. And that includes, the risk of higher inflation, the risk that it'll be more persistent, the risk that the labor market will weaken. People are going to have different assessments of that risk. So that you put that in there too. So those are the two ways that the two things I think that drive these things. Remember though, as I mentioned earlier, with uncertainty as elevated as it is, no one holds these rate paths with a lot of conviction. So that's really where it is. It's a function of those things. And I think as the data come in, you should see those differences diminish.
If I could follow up, you've said the policy is in a good place and that it's modestly restrictive. Given all the uncertainty you just talked about, tariff levels, uncertainty around the pass-through, is it price increases versus margin compression, some of the softness that Chris talked about in labor and housing, why wouldn't it be better to have rates at a more neutral setting as the economy heads into this period of very high uncertainty?
So if you just look backward at the data, that's what you would say, but that's not. We have to be forward-looking, and the thing that every forecaster, every outside forecaster, and the Fed is saying is that we expect a meaningful amount of inflation to arrive in coming months, and we have to take that into account. So I think a backward-looking look would lead you to a neutral stance, but we can't. We have to look at that, and because the economy is still solid, we can take the time to actually see what's going to happen. There's a range of possibilities on how large the inflation effects and the other effects are going to be. So we'll make smarter and better decisions if we just wait a couple of months or however long it takes to get a sense of really what is going to be the pass-through of inflation and what's going to be the effects on spending and on hiring and all those things.
He just told us that inflation's coming up soon.
Michael McKee from Bloomberg Radio and Television. Your friend down at 1600 Pennsylvania Avenue continues to lob insults in your direction.
He's talking about
and
Trump.
I'm wondering, given now that the Supreme Court has maybe carved out the Fed from some of the legal implications of that, whether this is just noise that the markets and everybody should ignore until your term is up, or whether you worry that it could lead to more pressure on confidence on Wall Street, on consumers, about the outlook for the economy.
Okay. From my standpoint, it's not complicated. What everyone on the FOMC wants is a good, solid American economy with a strong labor market and price stability. That's what we want. We think our policy is well positioned right now to deliver that and to be able to respond in a timely way as the data lead us around. The economy's been resilient, and part of that is our stance. And again, we think we're in a good place on that to respond to significant economic developments. That's what matters. That is what matters to us. Pretty much that's all that matters to us.
I need to ask, assuming you are not reappointed, would you stay on as governor when your term as chair ends?
I'm not thinking about that. I'm thinking about this.
Andrew.
This guy's got the best shot down.
Thanks, Mr. Chairman.
That's why he's the boy.
I guess with
why he's the
workplace
boy.
raids increasing, picking up significantly, what kind of effect would that have on the labor market in
Sorry,
the short
with
term?
what picking up?
Workplace raids.
So you're asking immigration.
Yeah.
You know, I wouldn't want to speculate. One way to get at that from an economic standpoint, we of course don't comment on immigration policy. It's not ours to make or comment on. But what you see is an unemployment rate that has been really solid and at a low level not really increasing. It's been in a good range and well within the range of mainstream estimates of maximum employment. And that means, like, part of that is that labor demand and labor supply are kind of moving down at the same rate. Labor demand is softening. You see that in job creation, but it's still kind of at a healthy level. And labor supply is diminishing because the immigration numbers that we see are much lower than they were. So those two factors, supply and demand, that's what has kept the unemployment rate in a reasonably stable place.
Okay, thanks. The other thing I wanted to follow up on is if you could elaborate on the potential changes to the SEP that you suggested were part of the framework review, I think.
So the framework review really has two tracks, right? The first track is our policy framework that is reflected in the consensus statement. And we've said that we would finish that and announce it by the end of the summer. So we're well along in that process. We've had the meetings that we need to have, and we're now going to be going into, into discussions about, specific changes to language. So that's the framework part of it. The second part of it is our communications tools and practices. Pardon me. And that part comes next. Okay, that's what we're going to do in the meetings this fall. Actually, what we did at this meeting, though, is we sort of prepared the ground for that. We had a meeting where we talked at a high level about a number of ideas. The SEP is part of it. Many other ideas. It's sort of, how do we think our communications can be improved? There are a number of ideas. People offered a really it was a great conversation, number of ideas, but we're going to look at those with staff briefing and a lot of thought in the fall. And I would say when it comes to changing communications, I would only support things really that only implement things that have very broad support. And also you want to be really careful because I think our communications are pretty well received. They're not broken. So more is not necessarily better, but better is better. So we're going to be looking at ways to do things that will improve the clarity of what we do for the benefit of the public.
This has been
Thanks, Chair Powell. Kelly O'Grady, CBS News. You're famously known as the guy that makes decision based on data instead of speculation. You've said today the inflation data is in a good place. We don't know how tariffs are going to impact prices going forward. That's uncertain. But I've got to go back to the last time that you cut rates in December, and there was still the what if of tariffs. So what made you feel comfortable cutting then when inflation was higher than where it is today and you didn't cut today?
She seems like she was going to slap him if he didn't give her the answer.
The forecast for inflation in December was 2.5%. Core PCE for 2025, the forecast was 2.5%, which was a good inflation forecast. I think what we've learned is that, and this was long before we had any idea of what the actual policies would be, we've learned that the tariffs are going to be substantially larger than forecasters generally thought. And we don't, our forecasts are generally not particularly different from those of other well-resourced forecasting operations. So what we learned, and particularly in April, was that very substantially larger tariffs were coming and that would mean higher inflation. That's what happened. And so you saw 2.5% forecast in December, you saw 2.8% in March, and you see 3.1% now. So it's 0.6 higher inflation for 2025, and that's a big part of the change, and that's due to the effects of the tariffs that are, we don't know where they're going to land, but it's pretty apparent they're going to land higher than outside forecasters were really guessing at the end of last year.
My follow-up to that, I think consumers, right, we're looking for relief on rates when it comes to mortgages, car loans. Small businesses want to take out more manageable loans. When you look at the cumulative inflation over the past 5 years, prices have risen over 20%. It's been a rough road. So what is the tipping point then for the wait and see approach in terms of how much it's going to help versus when it hurts the American consumer?
Well, I mean, we're trying to restore price. The best thing we can do for the public that we serve is restore price stability. If we can, and we will, restore price stability, meaning 2% inflation on a durable, sustainable basis. That, and also maximum employment. If we restore those things, that's the best thing, and that is our goal. The best thing we can do for the American people, for households and businesses, that is the ultimate thing that we can deliver. And they can make their decisions without having to think about inflation all the time. So in the meantime, we have to keep rates high to get inflation all the way down. They're not very high, let's be honest. I would say policy is modestly or moderately, probably modestly now restrictive. If you look at the economy, it's not performing as though it were performing under very strict monetary policy, very restrictive monetary policy.
Trump's going to say otherwise.
So I would say probably modestly restrictive.
Trump
And so what it
will
will
say
take
otherwise.
is confidence that inflation is coming down. Now, I would say without tariffs, that confidence would be building, because if you see what's happening with non-housing services and housing services, which are the other two big pieces other than goods, those are coming down really nicely now. So I think we have to learn a little more about tariffs. I don't know what the right way for us to react will be. I think it's hard to know with any confidence how we should react until we see really the size of the effects, and then we can start to make a better judgment. So that's what we're doing, and I think we can take the time to do that because unemployment is 4.2%. Wages are moving up. Real wages are moving up at a healthy clip now, and inflation is 2.3% headline inflation over a 12-month basis. So it's a good economy and a solid economy with decent growth.
Thank you, Chair Powell. So you're saying that uncertainty has come down, the economy is moving at a solid pace, inflation has come down over the past 3 months, and this is all moving in the right direction. So are you indicating here that Americans should expect some sort of economic pain in the second half of the year?
I'm not saying that at all. From our standpoint, what I can say is that the U.S. economy is in solid shape. Inflation has come down. The unemployment rate remains at 4.2%. As I mentioned, real wages are moving up. It's a good job creation is at a healthy level. Unemployment, again, as I said, low. Labor force participation in a good place. So, and what we're waiting for to reduce rates is to understand what will happen with really the tariff inflation. And there's a lot of uncertainty about that. Every forecaster you can name who is a professional forecaster with adequate resources and forecasts for a living is forecasting pretty significant. Everyone that I know is forecasting a meaningful increase in inflation in coming months from tariffs, because someone has to pay for the tariffs, and it will be someone in that chain that I mentioned between the manufacturer, the exporter, the importer, the retailer, ultimately somebody putting it into a good of some kind, or just the consumer buying it. And all through that chain, people will be trying not to be the ones who pick up the cost. But ultimately, the cost of the tariff has to be paid. And some of it will fall on the end consumer. We know that because that's what businesses say. That's what the data say from past. So we know that's coming. And we just want to see a little bit of that before we make judgments prematurely.
And follow up on that. So you spent years though talking about how you're data dependent, and be a little more direct on this. Now you're making decisions looking forward. Doesn't the data you're seeing today indicate there should be a rate cut?
No, I mean, your monetary policy has to be forward-looking. That is elementary. You've got to be looking. I always talk about the incoming data, the evolving outlook, and the balance of risks. That we say that over and over and over again.
We know.
Right? So it's always forward-looking. If you know, at the very beginning of the pandemic, we cut rates to zero immediately. Nothing had happened. We just knew that it was going to be really bad, right? So we took very aggressive forward-looking because we knew things were going to be unusually difficult. So, of course, this is something we sort of know is coming. We just don't know the size of it. And again, the economy seems to be in solid shape. So the labor market's not crying out for a rate cut. Businesses, were in a bit of shock after April 2, but you see business sentiment. You talk to business people now. There's a very different feeling now that people are working their way through this, and they understand how they're going to go, and it feels much more positive and constructive than it did 3 months ago, let's say. So, again, we think that our current stance of monetary policy is in a good place.
Like the stream, ladies and gentlemen.
With Bloomberg. Chair Powell, in February, you told Congress that the Fed is, quote, overworked, maybe not overstaffed. Then in a memo to staff in May announcing a deferred resignation program at the Fed, you said you wanted to ensure that the Fed was, quote, right-sized. Those two statements appear to be at odds with one another. Could you explain what changed in the roughly 3 months between those statements that made you decide that staff levels at the Fed should decline?
I don't see them at all as intention. So I was asked, is the Fed overstaffed? And I said, no, and I sort of said, as a pun, overworked but not overstaffed. People do work extremely hard at the Fed, and I know they work hard at Bloomberg too. So, but we work hard, but I would say this. So we are careful stewards of public resources, and sometimes you need to show that. So there have been several times in our history, modern history, where the Fed has said, you know what, we're going to do a buyout. We're going to show the public, we're going to demonstrate that we are good stewards of public resources. So we thought, and I thought, that this is a time when we can, we grow at about, our headcount has grown at about 1% a year. So over the course of a couple of years, we're doing a careful scrub of the board and all the reserve banks, and we're going to find 10% of employees who can do something else, where we can streamline our operations, and we think we can get there in a couple of years. We think we can do that, and we think this is without taking risk to carrying out our critical missions. So this is something you do very carefully, thoughtfully, and you do it, again, respecting that we have critical missions to carry out. I've had experience, a lot of experience in my prior careers, with headcount reductions and things like that, and this is how you do it professionally. You do it carefully, thoughtfully, with a lot of planning, and you do it over a period of time. And I think the Fed will be fine. I think no one will notice any decline in our ability to carry out our missions. And I think it's just us wanting to demonstrate to the public that we are actually good stewards of their resources. We're effectively wiping out 10 years of headcount growth with this. So, I mean, we wanted to show that, that we're good stewards.
We don't
How is
care,
progress
bro.
on
Just cut
reducing
the
headcount going
rates.
so far? Are you on track to meet the goal?
We're just at the very beginning. As you know, we're doing a buyout program. We're gonna hit that goal. I think many organizations find that they can do this. You don't want to do it every year or anything, but you can do it at intervals, and you wind up not interfering with your ability to perform your jobs.
Claire.
Here she is.
Chair Powell, Claire Jones from the
Financial
Financial Times.
Times. Here we
As you're
go.
no doubt aware, the Senate Finance Committee has tabled its version of the reconciliation bill this week, and I was wondering if you could tell me a little bit about the tenor of the debate at the FOMC over the past few days on fiscal policy and the degree to which that influenced people's projections for 2026 and beyond. Thank you.
Yeah, so, we don't sit around and debate or really discuss. We take fiscal policy as fully exogenous, and so we actually, really didn't talk about the bill or the contents of it. It's still evolving. When it gets closer, remember also we have a very, very large economy, and that the effects will be at the margin. I expect that they may already be in, but they will be in by the next meeting. We'll make an estimate, but it's not a major thing. It's nothing that we discuss. It may have been mentioned a couple of times, but as something that's coming in. But I think the outcome is, we don't know the outcome yet there, so hard to be real specific.
Neil.
Thanks, Chair Powell. Neil Irwin with Axios. There have been some cutbacks in economic statistics collection in the last few weeks, and worries that long-running problems around funding and response rates may be getting worse. How much is this concern on your radar? How much confidence do you have that the gauges you're watching to assess the economy are reliable right now?
Two things. One, the data we get right now, we can do our jobs. I'm not concerned that we can't do our jobs. That's not the point. The point really is that we are starting to see layoffs, and important gatherers of data are saying that they're having to cut back on the size of their surveys. That's going to lead to more volatility in the surveys. I think we should take a step back and, from our standpoint, and I think the standpoint of businesses and governments and everyone, having really good data on the state of the economy at any given time is a huge public good. It helps, it not just doesn't help the Fed, it helps the government, it helps Congress, it helps the executive branch. More importantly, really, it helps businesses. They need to know what's going on in the economy. The United States has been a leader for many, many years in this whole project of measuring and understanding what's happening in our very large and dynamic economy. And I hate to see us cutting back on that because it is a real benefit to the general public that people in all kinds of jobs have the best possible understanding of what's happening in the economy and hence what's likely to happen. It's very hard to measure what's going on in the U.S. economy. If you read, there was a book called, it's really remarkable how many things you need to understand to estimate U.S. GDP. Very, very difficult. And it's so important that we get it right. I just would say it's not a place I would want to keep investing in that, for the good of the general public.
There's a book called
Victoria.
Powell, man.
Hi, Victoria Guida with Politico. So you're conducting this monetary policy strategy framework review, but next year we're supposed to have a new Fed chair, and I'm wondering if that affects at all the way that you're approaching this. How do you ensure that this framework will actually be durable?
The framework document goes back to 2012, and it's the committee's document. It's not like we're going to invent a brand new way to do things. It's been an evolving document, so it shouldn't depend on who the chair is at all. It should depend on what's happening in the economy and what the committee wants to do. So, yeah, it isn't really tied to any particular chair. And we used to renew it every year. Now we do it every 5 years. So, but I don't think I've never heard anyone raise this issue that a new chair might want to come in and go in a completely different direction. I really don't think that's right. But but that's not going to be up to me to decide.
Is that affecting at all who you're consulting with?
Not at all. Not in any way.
Yeah.
He don't care. He doesn't.
Thank you. Chair Powell, Matt Egan from CNN. Relatively low gas prices this year have helped drive down inflation in recent reports, but that trend is starting to reverse given the crisis in the Middle East. How are you thinking about how the Israel-Iran conflict will impact the economy, especially inflation? And what lessons were learned during the 2022 period when another conflict, the Russia-Ukraine war, sent oil and gas prices skyrocketing?
So, of course, we're watching, like everybody else is, what's going on. I really don't have any comment on that. Possible that we'll see higher energy prices. What's tended to happen is when there's turmoil in the Middle East, you may see a spike in energy prices, but tends to come down. Those things don't generally tend to have lasting effects on inflation, although, of course, in the 1970s, they famously did because you had a series of very, very large shocks. But we haven't seen anything like that now. The U.S. economy is far less dependent on foreign oil than it was back in the 1970s. So, but there.
Trump wants to. Trump's meeting in an hour in
artificial
Iran and
intelligence.
Israel.
Some technology executives have recently
to
been
the White
warning
House,
that
apparently.
AI could wipe out a large chunk of entry-level jobs and significantly increase the unemployment rate. I'm wondering how concerned you are, if at all, about the threat that AI poses to employment.
So this is the question. The question really is, will AI be more augmenting labor or replacing labor? And I wouldn't, we all see those announcements, including one today. I wouldn't, overread a couple of data points because, AI should be creating jobs at the same time. It may be replacing, maybe doing both. Anyone who's done any work with it, with AI, will have been a little bit stunned at how capable it is. And it's just a different thing. So I think this is something that certainly has transformational potential. And probably we're in the very early stages of it. They say what you're seeing now compared to what you'll see in 2 years is going to be very different and even more effective. So I think it's really hard to know. Of course, there are optimists who feel like it's going to make everybody much more productive. And there are those who think it's going to replace an awful lot of jobs right across the income spectrum, white collar, blue collar, and everything. So I just don't know. We don't have a house view on that, but this is going to be a very important question for some time.
Greg.
Thank you. Greg Rapp from MarketWatch. I was wondering if you could step back a little bit, Chair Powell. There's a spate of articles and a lot of op-eds now in the newspapers saying that the U.S. economy and the global economy is going through this profound change, akin to the end of the Bretton Woods era in the 1970s. And don't you owe the American people some sort of explanation for what we're going through? I mean, I noticed earlier this month when you talked about Bretton Woods a little bit, and you said that Bretton Woods, the Fed staff had to change how the dollar, movements of the dollar was impacting the economy. Are we going through something like that now? That, are you having to change how you do monetary policy? Is it that fundamental a change underway? Thanks.
It's certainly a time of real change. From a geopolitical standpoint, from a trade standpoint, from an immigration standpoint. You see this not just here, but everywhere. So there's quite a lot going on. It doesn't change the way we do monetary policy in the near term. I mean, and it doesn't change our objectives or what we need to do. And, these things are not really our issues. They're really issues for elected governments. All of those issues are really for elected governments. But there's no question it's a time of real change, and very hard to see where that goes. Will it be
2,000 likes?
There have
Come
been
on, we can
many
do that.
things written about how it's going to be a more inflationary time. That's possible. It's not guaranteed. AI could cut in the very other direction. AI could make people much more productive and
I do remember him.
push in the other direction. I don't know, though.
think
So,
he's
but
coming.
you're right. But honestly, our focus is a much more practical one, and that is how do we keep inflation low and employment high in the near term. That's really what we're about.
Mark.
Hello, Chairman Powell. Mark Hamrick with Bankrate. What is the view about the growing amount of slack in the job market, including the softening in payrolls, the forecast of a modest rise in the unemployment rate, and the ability of workers to demand wage hikes or not in this environment where you have inflation surging?
You don't really see unemployment going up. You don't see increased slack, really. I mean, at the margin, remember, you're at 4.2% unemployment. That was, for many, many years, that was a extremely low level. It happens to have come up off of an even lower level as we came out of the pandemic. We were as low as 3.4%, but 4.2% is probably at the low end of estimates of the longer run, sustainable level of natural rate of unemployment. So I guess I wouldn't agree with that. And also, in terms of wages, real wages after inflation have been moving up sort of more than was consistent with 2% inflation. They're still moving up at a healthy clip, and I think much more consistent with 2% inflation given a reasonable assessment of trend productivity. So it's a pretty good labor market. You're right that the level of job creation has come down, but so has the supply of workers, the change in the supply, the new supply. So you've seen the unemployment rate remain pretty stable at 4.2. It's been as high as 4.3, but those are good numbers. So it's a pretty good labor market. There's a more concerning thing is there are not a lot of layoffs, but there are not a lot of job creation. The number, if you're out of work, it's hard to find a job, but very few people are being laid off at this point. So that's an equilibrium we watch very, very carefully, because if there were to be significant layoffs and the job finding rate were to remain this low, you would have an increase in unemployment fairly quickly. But that hasn't happened. It really hasn't happened. The U.S. economy has defied all kinds of forecasts for it to weaken, really, over the last 3 years. And it's been remarkable to see just again and again when people think it's going to weaken. Now, eventually it will, but we don't see signs of that now.
Go to Jean for the last question. Hi, Chair Powell. Jean Young with M&I Market News. There's been a lot of talk about cuts. I wanted to ask you, why do you think there are no forecasts for rates to rise or even to stay where they are next year, given that the projection for inflation is to rise to 3%, and there's a lot of there's some skepticism over whether those price hikes will be a one-time event?
So there are a number of people on the committee who wrote down no cuts this year, but some cuts next year. So, I think, people are writing down their most likely path, right? They're not saying there's zero possibility of other things. Really, it's think of it as the least unlikely path in a situation like this where uncertainty is very high. I think, again, people write down their rate paths, and they do not have like a really high conviction that this is exactly what's going to happen over the next 2 years. No one feels that way about their rate path. They feel like, what am I going to write down? I mean, what would you write down? It's not easy to do that with confidence. So I would just say it that way. We don't rule things in or out. Certainly a hike is not the base case at all. It's not something people are writing down. But in the meantime, we do the best we can with these forecasts, and I think they're representative of the different forecasts and different reaction functions that people on the committee have. So thank you very much. Thanks.
That's it. That is shocking. I don't believe it. I actually don't believe it. What's been said. That's your FOMC right there, ladies and gentlemen. Trump right now has been saying, he's been saying that he thought that Iran was a few weeks away from a nuclear weapon, and he believes that they would have used it. He says that when asked about the Middle East, he says, I don't want to get involved. So that's good news. And he's not made a final decision yet. And he asked if the Iranian regime could fall. Anything can happen. But the markets are just not reacting to anything. Again, a nothing burger. Euros come down, so they know where they are with that. The NASDAQ hasn't gone anywhere. Unbelievable. For God's sake, this market is so dog. Gold's coming down. No interest rate cuts, making sense. Okay. Dollar dominance, making its move. Oh, God, that was unbelievable. Look at that. Dollar dominance is going up. The NASDAQ, in principle, coming up as well. But it's just catch the bond market as well has come back down. The yields, yeah, it's a bit of a dog show, really. But he said that they expect inflation to go up. So, and there's your Bitcoin. So, with that being said, of course, some activity is going to happen tonight with Israel. So please be mindful when you're trading. Okay. And remember, there's a discount code pinned to the top of the chat if you want to join the Platinum membership. That will be expiring today. But other than that, bit of a boring FOMC, if I'm quite frank with you guys. But mad love and respect for passing through. All right. Thank you so much, guys. Take care of yourselves, and I'll tune in to you all tomorrow morning. Peace.